Well, hello everyone and welcome to Moementum channel. My name is Mo, and in this video, I'm going to be walking you through our portfolio that we have invested in the stock market, mainly consisting of high quality index fund ETFs. This portfolio currently sits just over $472,000. I'll be sharing with you what are the latest buys that we've had in the stock market and what is the breakdown of our investments among different types of accounts, TFSA, RRSP, and non-registered accounts. Without any further ado, let's get into it. Now, I wanted to point out that on one of my last videos, I received a comment asking me if I can try to be clear based on the breakdown of my holdings, how much of it is in my tax-free savings account, registered retirement savings account, and non-registered accounts. That's why in this video, I'm actually going to cover on that. There was also another feedback that I got and question from Shira, asking whether it would be possible to talk a little bit about how I've created a dashboard. I did respond to them that in developing the dashboard, I've connected the data that I'm capturing from Google Spreadsheet to that of the Google Looker Data Studio. But I also offered that if there's an interest, and maybe I can make a tutorial video talking about how I've developed that Google Data Studio for free from scratch. And that's something that they encourage, and they were kind of receptive to the idea. Now, I have not yet made that video to walk you step by step through how I built this dashboard from scratch. It's going to take a while. Be patient with me, but definitely I'll be adding it to my to-do list to make sure I make such a video and help you to possibly see how you can start something like that from scratch for yourself, if that's something that interests you. This is the product that you can see. I've shared the link transparently on all of my YouTube descriptions for the most recent videos, as well as if you are following me on Blossom app, that's when you can see that I've posted about this dashboard transparently on there as well. This portfolio is currently showing a total value balance of $472,391. The amount that we have deposited into this portfolio from the scratch, how much money we've put in, is $405,294. You can see it's since the inception of this portfolio from the scratch, ever since we started investing, the value is up by close to roughly just around $70,000, or a total return based on the money inputted and money growth to 16.56%. I just want to also point out that a lot of the new money that I've put in this portfolio has been recent additions. About a year ago or so, just shy of a year ago, I had a resale of one of my properties, and that resulted in a considerable amount of capital gain, and that I've redeployed and invested in the stock market, and that's why the value of this investment has grown drastically. The holdings for this portfolio are showcased here, but you do notice on this dashboard, I've added a few new parts. At the bottom right, you can see I've added a widget whereby it shows you the investment account types. So you do notice that 52% of our entire investments are in our non-registered accounts, more than half, just about half of them, and the remaining belongs to TFSA and RRSP. Around 27% of our holding between my wife and I are in our tax-free savings account, and the remaining 21% is in our registered retirement savings plan. What's more, I've also showcased here for you the amount that this portfolio, our current holdings, are showing. So currently our holdings are in X equity, VT, and VTI, and some cash balance. For these amount of shares that we've invested in, and based on their market value as well as the average purchase price that we've had, if we were to sell all of these positions at this time, excluding of course the cash, the position, the unrealized return for us would be $1,000. So excluding the cash, if we were to sell our shares of X equity, VT, and VTI, what would be our unrealized gain or loss? We are currently seeing an unrealized profit of $1,000. Keep in mind, a lot of my additions to X equity have been recent. It's not been that long ago. In fact, I sold a lot of my past ETFs, such as VFV, VDY, XIC, XEC, XEF, most of which at profit, some of which at barely a loss, and then redeployed those funds to buy shares of X equity. Hence, it's not been sitting in the shares of X equity for such a long time. As a result of that, majority of my holdings in X equity are at or just slightly missing the current purchase price for X equity, which is why you can see that X equity is sitting at almost 0%. No loss or no gain for X equity at this point. However, for VT and VTI, I've held them in my portfolio for a bit longer. For VTI, which is the Vanguard Total Stock Market Index Fund, which gives us exposure to the entire US stock market, it's up by 4.8%. We hold shares of VTI, which is in US dollars, in our registered retirement savings plan to take advantage of the withholding tax treaties and avoiding to pay that 15% withholding taxes for the VTI. Next, we have shares of VT. It is Vanguard Total World Stock Index Fund. It's in US dollars and we hold it in our RRSP accounts. Through VT, we get exposure to the entire global stock market based on the market capitalizations. In this case, shares of our VT, which we have 205 of those, are up by just shy of 1%. You do notice in this dashboard, I've also illustrated how much dividend income we are expecting to collect from these holdings based on the number of shares as well as the dividend amount paid per share throughout each year. This is the total annual expected dividend income. The majority of our dividend income is expected from X equity, given that we have 15,741 shares of X equity at this time, expecting us to earn $8,185 in dividend income roughly per year. The market values for these holdings are also illustrated on this dashboard. I did mention at the onset of the video that I was going to share with you the recent buys that we had in the stock market. For us, compared to the last video, you would notice that we've bought approximately 800 or so shares of X equity. We added 800 more shares even during the past 1 week. We also added 1 extra shares of VTI. And so we bought 1 more shares of VTI and approximately 800 shares of X equity. Those were our only buys. We didn't have any sales. As a result of that, the amount of available cash in our brokerage account has gone down. We have now approximately $9,000 available in our cash account, available in our brokerage account, which we would like to gradually deploy over the next coming weeks as well and buy more shares of these high quality index funds. With X equity, it is considered an all-in-one ETF, which what it indicates is that just by holding on to shares of X equity, we are already getting global diversification, holding on to shares of American companies, Canadian companies, emerging markets, as well as internationals. That's a one-stop shop solution for many investors, particularly for the new investors or those who want to pursue a more of a lazy couch potato approach of not having to pick and choose stocks or pick and choose different ETFs. That's where we have X equity. And in fact, as you do notice, close to 90% of our holdings are already in X equity. The remaining is we get exposure to 5.7% to VT, 3.4% to VTI, and about 2% now sitting in cash, as I pointed out. We do have some target geographical exposure set for this portfolio. And this is based on my research, and really it's a little bit of that preferential approach as well. For me personally, I would like to get about 50% exposure to the US market. The reason I'm setting that target is that the US economy and the US GDP as a whole accounts for just shy of 60% of the world economy and the total global stock market, which is why I think the 50% target is a reasonable one. I think even if it was as high as 60%, it would not still be a terrible idea. But for me, I've set the target of 50% for US. And it's like I said, it's a little bit of a preference and choice. As for international markets, the target is at 25%. You do notice that my current exposure geographically is at around 24%. So I'm getting gradually to that 50%, 25% target. Apologies. And for international and for US, I'm just shy of my target of 50% at around 47% current exposure. For Canada, I have had set a target of 20%, and currently I'm at around 24%. Some investors in the past have brought up the point around home bias, the fact that, the idea that as investors in Canada, we don't want to have a ton of our own investments in Canadian companies or Canadian businesses. And the fact that Canadian markets only accounts for approximately 3% of the global stock market and the global GDP. That's a valid point and a valid argument. I'm fully acknowledging that fact. That said, currently, I'm setting the target of 20%, which I think is just given the nature of the type of holdings that we have. With X equity, you're already getting almost 25% or 24% exposure to Canadian markets. If I was to really lower my Canadian exposure, the only ways to do so is by holding on to shares of VT and VTI a lot more. Particularly I believe with VT, you only get about 3% exposure to Canadian market. So if I added to more shares of VT, I can try to gradually over time lower my exposure to Canadian markets. And same goes for VTI, which is 100% exposure to US. By adding more shares of VTI to more portfolio, I would lower indirectly my exposure to Canadian markets. Lastly, for emerging markets, I have set a target of 5%. Currently, I'm at just slightly over 5%, which I'm happy with for now. These targets, asset allocations, are not set in stone. They are, I would say, fluid. For now, I've set these targets, but at the end of the day, I'm also learning day by day. Even though I've been investing in the market for the past 6 or 7 years, I don't consider myself to be a guru by any means. I'm learning just like many of us here on YouTube, or many of us on Blossom, many Canadian investors. It's a learning journey for all of us. I'm not afraid to admit to my mistakes. I'm totally fine with being challenged. But at the end of the day, it is my preference at this moment. But if you have any thoughts and suggestions, I'm open to hearing from you. And like I said, this is a learning journey for all of us. I don't think any one single investor can claim that they know it all and they have figured it out all by themselves. Lastly, but you do notice that I have illustrated the management expense ratio for these different ETFs that I have in my share holdings. X equity has a fee of 0.20%. VT has an management expense ratio of only 0.07%, and the lowest management expense ratio here belongs to VTI, which is at 0.03%. This portfolio is gradually growing as we are covering it. We are hovering closer over time to that 500,000. It's so exciting. I can't believe that we've been able to gradually grow it, but that's definitely our next milestone. Keep an eye on it. I hope that, as we grow this portfolio and as I share my journey here, it acts as an inspiration and a momentum for you all to want to also invest in the stock market and feel that you don't have to consider investing in the stock market as a very complex approach. In fact, you can do so very easily through broad-based market, global ETFs, such as the ones that we have, but there are also honestly so many other good ETFs out there that you can explore and you can include in your portfolio. If you have any question about my holdings and why I'm choosing the ETFs that I have, and any specific questions around investing in the stock market that I can be of any help, do let me know. Leave me a comment on YouTube video or post and share it with me on Blossom. I'm happy to hear from you, and like I said, happy to share my 2 cents and my learning based on my own personal experiences. Thank you so much, everyone, for your encouraging words, your support. It really means a lot to me, and I hope to see you all next time on another video here on Moementum Finance YouTube channel.